Hey everybody, welcome to this live stream. And in this live stream, we're going to take a look at the article Brucey and I wrote. Um, it's the article on Medium making sense of December's volatility and a market outlook. And we're going to take a look at the 4th December volatility where a lot of liquidations happened. I think 5.4 billion in the market or on Bitcoin. And this article goes in depth. But more on that later. This video is sponsored by thecrypto.com. It's the only single exchange that allows you to trade more than 200 pairs with up to 10x leverage. You can get access to more than 40 quarterly futures and perpetual contracts. You can earn daily rewards on your balance with no lock period. Find all the information right at the description of the video and earn extra $50 USD worth of CRO using the link below. So I am joined by Brucey. Hey Bruce, how are you doing?
Hey, I'm good. Thanks for having me.
Maybe I should introduce you a little bit. I think we know each other for, I think, 2 months, where we learned a lot about each other and our view on the markets. And Bruce and I are in the Deus Ex DAO Discord, or the DAO, the organization itself. And we wanted to do some more in-depth analysis on the markets in general, whether it's technical analysis or fundamental analysis. And this is, I think, one of our first public articles in which we take a look at more the technical side of the December volatility. Um, Bruce, what was like the idea behind this article, and why was this one of the most interesting events in the markets?
Sure. Well, one thing we mentioned in the piece, which I think is very unique about crypto, and that I would encourage everybody who wants to succeed in the markets to get a better understanding of, is all the information that's available for free or cheaply. And that's in sharp contrast to the traditional markets where you might need to have a Bloomberg subscription, or you may not even be able to get access unless you're part of an investment bank or a hedge fund and so forth. Um, but in crypto, there are so many tools that permit you not just to look at what's happening on the centralized exchanges, but also on the decentralized exchanges and on derivatives. Um, and then you, of course, also have on-chain. And basically, what we tried to do in an effort to create content for the DAO is to opine on how we view the markets, and especially, that's really interesting for me personally, when things happen that seem a little unexpected, right? And I think we have some discoveries that we talk about in that article that we dig into, and then using that data, that's both education for ourselves, but hopefully it also gives other people an impression of how you can use this information to better understand the dynamics in the market. Um,
Yeah, and I think that's amazing. Like, we can use all this data to get a better understanding what happened, and I think this volatility caught a lot of people offside. And of course, in hindsight, it all becomes much clearer about what happened. But if we do that analysis, we can get much more information on how to prevent those mistakes, or spot what's happening in the market before the big flushes happen or the big liquidations happen. So studying the past gives us much more information about the present and the future. It's the best thing we have. But I think we should just start with what happened in the market, and about which rally and what bigger liquidation event we're talking about. So we have the article here on the screen, and uh, we talk about this chart first, which is, I think, slightly vague. So maybe we should set it up on here on the Coinalyze window. So we talked about basically this last rally on Bitcoin, and over here you can see that Bitcoin from the 28th of September to the 20th of October made a move which is around 60%, and to this latest stop is even 70%. And after that, there was weakness in the market, and price actually started moving down into that big liquidation event that tapped back into that bottom. So I think our first finding here was that we saw that Bitcoin broke the all-time highs over here, and if you scroll back further, you can see it printed really an all-time high in comparison with these over here, but it only got above it slightly, and it got above that on lower volume. So that's I think often when I look at these events, I think that's if something peaks on lower volume, that might be a sign of weakness or a sign that liquidity is running out. So I think that was our first event we talked about in this article, where we saw that volume was going down. But more importantly, and that's if we go over here, this is the CVD on the charts. And I'm not sure, Bruce, maybe you want to talk a little bit about the CVD. I think you had quite a good explanation too.
Yeah, sure. So CVD is cumulative volume delta. So basically what it does is it looks at the net of buys and sells. And what's really great about Coinalyze is that you can get that either from a coin in aggregate, where it aggregates all the different exchanges that list out coins and then grabs that information. Or in this case, right, Ape, where you have pulled up Bitcoin against USD, which is a spot market on Coinbase. And then you have, for this market, I believe, right, you've pulled up the CBD on spot and then margined both against coins, which means, you know, someone might have Bitcoin or Ethereum as collateral against that, that future, and stablecoin margin contract. And so how you would use this, right? So these orange lines that we're seeing is they have to be anchored to a point in time, because what's happening is every day or every candle, and we're now on the 1 day, what would happen is you would take the net buys and you add those, and then you subtract the net sells, and then either that line, in case of net buy pressure goes up or net sell pressure goes down. So where you anchor it is important, because that's where you start basically doing the additions and subtractions. Now, what's really interesting, and I'm sure you could point that out, Abe, where we go from that first high to that higher high just on the price itself, right? And you see, okay, there's a slight increase there. But what's really interesting, just like you pointed out already, is just on the market itself, just on volume, right? Like, okay, the volume's down. But then if you look at the CVDs, you could actually see, okay, well, it looks like spot is down, it looks like futures are down, and it looks like that's true for both coin and stablecoin margin. So that's a really, really interesting finding, because that's a divergence. And so begs the question then, how can that market go up if most of this goes down, right? And what you can do then, and what could be a contrast, and maybe you would have that available, is if we look at Bitcoin on aggregate, right? So not just a single Coinbase pair, and then we pull up the market cap to open interest across all exchanges, you could actually see that what's driving up price is that in total, leverage against the market cap of Bitcoin is actually going up. And that's where you get the beginning of kind of this big divergence that precedes the dump.
Yeah. So I will pull up that chart in a few moments. But I want to go over like why this was really important. Because normally on Bitcoin moving up, you see something typically like this. Like Bitcoin is moving up, and then the spot market is also moving up, and you can see also futures moving up like that with the CVD, because there's more aggression in that market. There's more market buying because people want to have that asset and they use market orders to get in. That's basically what that CVD also measures here. But what's interesting on that last move up was that Bitcoin was going up, but it was mostly on futures. So that gives the idea that Bitcoin is actually rallying mostly on leverage, and people are using futures to push Bitcoin up or buy Bitcoin. And that's never a really stable environment for the market. So you always want to see some spot buying happening. And over here, you can see that the market was going up, but on average, as Bruce correctly identified here, there is that divergence. And those divergences show that actually sellers are stepping in here more and are aggressively stepping in. And you always have to compare that with the price action that happens after, because if sellers step in aggressively and buyers just keep that pressure up, that means that sellers are on the wrong side. But as you can see, it was actually the buyers on the wrong side because price started going down. And this is where we can look at that other chart you just mentioned. I have that one, I think, ready over here with especially the open interest market cap. But we need to introduce that one first. So the open interest in the market is the amount of open positions, in this case, the futures market. And this is the futures market on Bitcoin. And what you can see is, again, some kind of divergence here that shows that the open interest was actually going up over here too, in the stablecoin margin contracts, for example. And maybe, Bruce, you can tell us a little bit more why you would want to use that open interest divided by market cap ratio.
Yeah, sure. Well, just backtracking 1 second, right? You had said that in that initial rally up, that since that was driven by futures, that maybe might not be sustainable. And that's really important, I think, to understand, because if someone keeps a futures position open, especially in crypto, that's likely a perpetuals position. So it means regardless of whether someone is long or short, depending on what the most skewed trade is, there's going to be a funding rate you need to pay to keep that open. The other thing is, right, so there's a cost to holding a position, basically. The other thing is that since it is on leverage, it means that there is a chance of liquidation. And so what coin margined and stable coin margined means is that's your collateral to take the leverage against. And so that means that these are people who are much more likely to be using stop losses, for example. And that means that market makers particularly can go and hunt those stops, which is what really creates the wiki markets, that we think is so typical about crypto. And what we've seen over time is that as these products become more advanced, that there's more and more and more leverage coming into the market. And it's a contrast, because the more money comes into crypto as a whole, the less volatility there will be. But then relatively, if the leverage in a market for which open interest is the indicator increases, then that actually does increase potential volatility. And so the reason why we look at open interest to market cap is because of coin margin contracts. So for example, I think now about 35 to 40% of general leverage is against coins. And so if Bitcoin is 10K and Bitcoin goes to 20K, then it means for that 40% of people who are doing perpetual trading with coins as collateral, it means that now their collateral is worth twice as much in dollars. So technically, they can borrow twice as much. So just looking at open interest by itself, especially in an appreciating or depreciating market, right, isn't very high signal. Instead, what you need to look at is what is the total amount of leverage in the market in relation to the size of the market, because there's some correlation. And so that brings us to this indicator. And I think it is always natural that we will have open interest against a market. But then what you'll be able to see, especially maybe if you pull this to, or just zoom out, if you give people like a very long time frame on that open interest, you could start getting a sense of, okay, how high has that oscillated, right? So you could see, okay, well, if there is twice as much leverage in the market, well, that is, yeah, that's really, really high. And one of the things you could also see right here is that since the May top, the peak of open interest has kind of sloped down. You could say that there's a downtrend on that in general. And when that goes up, I think actually it's very visible during this May peak that as euphoria really happens, and I'm pretty sure if you look at the funding rate, you could see the same thing. People get so confident in price appreciation that they start opening more and more and more longs, right? Maybe it goes from 5x to 10x to 20x to 30x. And then what you'll see on that funding rate, so you'll see that it becomes very high. And so that means that the skew is towards the longs. And so the longs are paying the shorts. But if you compare that in May to the November, let's say, peak, right, the one we just had, you could see what the difference is in the bias of those perpetual contracts, right? The funding rate has never gotten as high again as it has in May. And that is really indicative of the exuberance that existed then.
Yeah, and I think that's really important for finding an imbalance in the market, like who's on the wrong side. And over here, you can see that people were pushing too much on futures, and especially when it was going down, because remind yourself that for every open long, there is an open short in these perpetual futures contracts. So there's always somebody on the wrong side and always somebody on the right side. And over here, you can slowly see that people were opening more and more positions. And if you consider those open positions like the long part of that position, you can see that those were actually more and more at a loss. And eventually what you get is a liquidation cascade. And within a liquidation cascade, and I'm going to show that mostly on the open interest stable coins. So I zoom in a little bit. You see that price starts to accelerate down and creates a big red candle. Eventually it creates a big wick because price deviates too far. But as you can see, the open interest drops heavily. And that means that somebody was selling at a loss because their position got liquidated and their positions got stopped out. But there is also somebody, of course, on the other side who had those shorts and closed that position too. So that's what all happens within this daily candle. High volatility, lots of liquidations, and people were on the wrong side. And of course, that gets fueled by normal stops in spot positions too, or people panicking that they see price going down. So that's basically what happened here in Bitcoin. Is that all we can say about this volatility? And should we look maybe at the rest of the market in what happened in the meantime? Or do you
we can do that. Maybe it's helpful kind of to talk about the environment as a whole. And I'm sure many people watching this are going to be on crypto Twitter and will have some gauge of that sentiment, which has increasingly turned bearish. And that's a function of a few things. It's the end of the year, so many funds, may need to close their P&L. there is high inflation and people are afraid of the Fed stopping their market buying of assets, or kind of tapering that, as they call it, as well as needing to raise the Federal Reserve rate, which is kind of the benchmark against which all the banks determine their interest rates. And they would do that to control inflation. So that's a big fear. And then I think from that indecision, what's happening is that people are really fleeing towards the stronger assets, which has predominantly been Bitcoin, Ethereum. Actually, Ethereum has been incredibly strong in relation to Bitcoin. Some major L1s, and in particular pockets of the market where people are rotating into. And so one thing Aperture and I have done is really take a look at that and show you how that looks in terms of price data too. So maybe we can sort of dig into that.
Yeah, sure. And I think I have to open another chart for that, and I think I have to search that. So maybe you could tell people where they can find us and find Deus Ex DAO in the meantime.
Yeah, sure. Well, guys, we are on Twitter, of course. And if you go to either of our profiles, you'll be able to find Deus Ex DAO. For those who are unfamiliar with us, we are a venture DAO. And as a private community, we try and collect the smartest people in crypto and provide advisory investment to projects, but also as a community within ourselves, we are trying to make each other succeed better in the markets. And part of that is what Aperture and I have done with this piece, which is try and make sense of the world. There's so much I learned from this guy, and it's an honor to be able to continue doing that.
Thank you for those kind words. I have these charts open, and I will share them in a few moments when they're all loaded. Because I think one of the relative strengths we saw in the market was in the metaverse. And actually, while Bitcoin was sloping down, let's see if we can share that. While Bitcoin was sloping down, the rest of the market started to outperform because liquidity was going deeper into the market, and people were, after that first Bitcoin rally, were looking for more gains. So I think the chart you wanted me to open is probably not this one. I think we have one on Ethereum.
I could pull it up if you would like.
Okay, yeah, because I'm not sure if we can. Do you want to look at Ethereum or the metaverse charts?
We could do both. Let me just pick my window. I will share right now. Let me see if you could. Yeah, let me know when you can see this.
Yeah, it's up now. Yeah.
Okay, awesome. Yeah, so we could go take a look at Ethereum. And sorry, this CoinAlyze might take a second to load. As you can see, maybe I can do it like this. It worked. Okay, awesome. Cool. So what we'll do is we can look at global data, which is something CoinAlyze just added, which is really, really awesome. So we can look at open interest, let's say volume, let's say funding rates. And what you can do with these, which is really awesome. So because it's global, it will show you all this data from all these exchanges that it incorporates. So this is all open interest against all these markets, against all coins. And now one of the things that we were doing, which is really, really interesting, and actually I see they added more ecosystems. They added Polygon and Solana now. But what we were doing is we isolated this to metaverse to kind of illustrate the trend that was playing out there. And let's see, coins category metaverse. And then I'm just going to add one more indicator, which is the same thing, but then just for Ethereum, right? So this is not a global indicator. Um, and then let's flip this to the daily. It's going to take a second to load. Okay, and then I'm just going to style this up. Cool. So if I full screen this, does this go full screen for you guys?
Yeah, it's fully visible.
Okay, great. Yeah. So what you could see, so here's the May peak. You can see the same trend on the aggregated Ethereum open interest. It's kind of the same thing as Bitcoin, right? It's slowly sloping down. But here, in this trend, so kind of from September upwards, it's actually been quite bullish. Um, and on the metaverse, you could see here, this middle one is volume. You could see kind of how starting July, there's been an incredible amount of volume going into the metaverse. And then here in October, this really popped off again. And so a lot of the bid has started to go there. You could see funding on metaverse is generally quite positive. And the open interest this is up. And if you compare that to the open interest to Ethereum, you could see kind of that divergence, right? How much up this is. And unless we pull an individual coin, so let's say Sand or Gala or something like that, we won't be able to see open interest to market cap. But in our article, we actually have done that. So if we go to a coin like that, you could see that open interest just kind of pop on that market, which means the money is flowing there.
Yeah, and I think I can show a chart on Sand, for example, because Sand was one of the market leaders on in the metaverse. But you can also see that once volatility hits in the market, nothing can really escape. So I want to mark that level of the 4th of December, which is exactly here on that bigger wick. But on the run up, you can see that volume, if we put some moving averages on here, you can also see that volume was slightly, going up, and it was outperforming. But eventually, price stalled and failed to make a new higher high, and then it broke down. It broke the trends. That's where you can see actually some of these rejections happening, which is a big change in trend. So while Bitcoin is slowly sloping down at a moment like that, there can still be coins outperforming. And actually, while Bitcoin is quite stable, a lot of coins can outperform if the attention of the market is there. And I think that really happened in the last year, where normally we had a full-blown alt season where all the coins went up, but because there are so much coins and so much ecosystems in the market, liquidity is more focused. So when an ecosystem or a section of the market starts moving, it's probably only that section. So if you have asked yourself in the last few months, like, why is my altcoin not moving? It's probably because the market isn't watching that altcoin or looking at that section of the market. So it is always a good idea to keep an eye on these rotations and keep an eye on the ecosystems that are moving, because those are the ones that are interesting to play in the market. And in this case, it was Sand, which made an insane increase. If you look at it from here, like the start of October to over here, it was 800%, and that's absolutely nuts, even in crypto. But that's eventually also where the weakness starts. Bitcoin starts sloping down. These ecosystems are up a lot and start to break that uptrend. And then when finally Bitcoin is also going down, because the market is quite correlated still. Also on Sand, there is that breakdown and that move down on the 4th of December. And if you put on, for example, a 100 moving average or a 20 EMA, you can see that the trend has changed also on these coins. So that's what I expect, is that they will continue to bleed in the upcoming weeks or months. until the market starts to recover, or until inflows go back into this market. So as Bruce correctly said, we want to see strength in Bitcoin and Ethereum first, like the bigger market leaders, because these are the less risky assets in the market. Even, for some traditional traders, Bitcoin and Ethereum are super volatile. Altcoins are even more volatile. So, there is a bigger risk in staying in these altcoins because they're just less liquid, and that's what you often see when Bitcoin isn't performing or slowly bleeding or just going sideways. You can see that these coins are slowly bleeding, and you hope they won't accelerate or actually start liquidating more people here. You really want to see some kind of trend change happening to the upside, and see a change in that structure, see buying interest come back. So that's, I think, is there more about what we can say about the metaverse or relative strength here?
Well, I think your commentary on trend change is really great. And one of the things that I'm sure people struggle with, and I also struggle with, is, well, if you have conviction in an asset, right? If you believe it's going to appreciate in the long term, well, if that trend is negative, right? And especially when there's nothing in the near term that gives you conviction that maybe things would change with Bitcoin or Ethereum, well, then it's quite likely that the bleed will continue on your favorite alt. And I then wonder about, well, for the people who maybe have the skills to sell and to be able to buy back later, maybe you could talk about this, Abe, because I think this is more your expertise than mine. But what type of signal would you look for to cut? And then what type of signal would you look for to re-enter? Because it takes a lot of conviction, I think, to be able to load up on your alts at depressed prices, and then to see them go down another 90%.
It's those heavy bags that people keep holding and slowly see the value going down. So I think it's a little bit separate from the article, but Bruce and I had quite some interesting discussions on this. I think you could, for example, use exactly the setup I have shown here. In an uptrend, it's always clear that price is moving up, and it's really often holding specific levels or holding above those specific levels. Personally, I like to use moving averages too. And I think one of the most important ones I use is the 100 moving average. It's the yellow moving average here on the chart, and at 100 moving average on the 4-hour or the daily is often a good indication for a longer term trend. And then I use a more shorter period moving average to identify where price is, either close to that moving average or showing momentum where it's deviating away from that moving average. And that's quite normal in a trend. As you can see, it deviates, it pulls back, deviates, pulls back. You can also identify some basic market structures like supports. Over here, you can see one. I think this one was one too. So with those basic supports and some moving averages, you can see that if price is still above that 100 moving average, the trend is probably still intact, and especially the trend is super strong when it's above that 20 EMA. But it gets a little bit worrying when you see that momentum is changing and that market structure is changing. So over here you can see a peak and then maybe a lower high, and there is still that support over here, but eventually that gets broken, and that's like a big warning sign. So you could either get out of this when it breaks support, whether it breaks the 100 moving average, but you can see that weakness when price starts to go up here back to that moving average, the 20 and the 100, and that support level, and then starts to reject that with a candle. So It's not always an easy way to identify that, but it's often about finding some confluence where you find some indications that the trend was intact. Like in the past, you can see that these moving averages were relevant to the price action and the uptrend, but now you see that they are being broken, and that's where I think you need to be quite emotionless in where you say, okay, I have my signals and I'm just going to execute my signals. I see that the trend is broken. I see my idea that this was a longer term trend is actually failing, and this is actually the proof against it. So you just have to get out of the market, and it always depends on where you bought, if that's easier or not. If you bought here and you can take profit here, that's absolutely fine. But if you bought here and then you have to sit through that drawdown and sit through loss after loss, it's a little bit harder. So it's always a little bit in relation to your original position, to your portfolio, to whatever risk you have on in other positions in the market. So it's not always an easy question, but you can do it with some simple tools. And I think the biggest problem is that psychology where you just have to say, okay, I see that the trend is broken out. I'm just going to get out and don't want to marry a bag like this. I made my profit, and I'll wait for better conditions to reinvest that again.
I think that's great commentary. And, I ask because I do think it is related to the article in the sense that this is a different environment than we have had for the largest part of this year. We've only had a few months that really were down. And I think it's probably helpful for people to know how to invalidate or to validate. I do think we could talk about on-chain for a second if we still have time.
Yeah, let's do the on-chain, and then we of course can invite people to look at the articles so they can view the charts themselves eventually. But let's take a look at the on-chain, and I think maybe you can share your screen again with the indicators. You just take a few, and then we'll leave it at that.
Okay. Yeah, let's do that.
Okay.
So we are now looking at Bitcoin and the exchange net position change. So this is basically a 30-day moving average or a 30-day change of all these assets, whether they're held on exchanges or not. And what you could typically see, so for example, here in this 2017 run-up, is during the peak, all these assets go to exchanges. And you might wonder, what are they going to do with all those assets on those exchanges? Well, that is trade them, typically sell them. And you can see here in these periods that there have actually been really significant periods where people started moving it out of exchanges. And this is also in the run-up of the DeFi summer, right, where there's less utility for coins on exchanges, so you move them out. And then I'm just going to zoom in on this part. So what you can see during the capitulation of May is that a lot of coins were moved to exchanges as people were capitulating and selling. But now, that's actually really not been the case, not even recently. And mind you, this is a 30-day average, so probably this is going to go a little lower. But I think this is hardly going to hit a positive amount to exchanges, and still there are more outflows. So that's quite bullish. The other thing is the net transfer value to exchanges. So let me just pull that up. And net flow. Basically the same thinking here, and we're just going to smooth that with an exponential moving average. And that exponential means it's weighting the recent days in the computation more. And you can see the same trend, right? So during peaks, for example, you get these peaks of inflows where people are selling. And then here, for example, during this drop here in March, the COVID drop, you see all these coins move to exchanges. Then we had that happen again here in May, and about 14,000 Bitcoin equivalents moved there. But we're not even coming close here in recent times, which is particularly interesting. And I'll just take off the moving average so we get that data. But you could see, yeah, we just moved 11,000, which versus The July last wick down it's less than half even. So that's another indicator. And we move on to the spent output profit ratio. And what that does is that it measures the profit or loss of every coin that is changed hands. And I'm just going to smooth that for a second. And so what you're seeing here is that as we run up in 2020, that more and more people are moving coins, and that the majority of those coins are being moved are greatly in profit. And what does that mean? Well, it means people who have held for a long time and bought at a cheaper price finally get out at a profit. And then what you see too is that during this run up, right, most of these coins change hands, but then more and more people have actually already taken their partial profits, because most people who know a lot about Bitcoin or crypto, they won't sell the whole bag, they'll just sell incrementally. So you can see sort of that sell pressure weighing off. And then here during the May crash, you see during that capitulation, there's actually people selling their coins at a loss because they're afraid, they're afraid it might go deeper and deeper. But at some points they exhaust. And this point actually is very interesting to me. So this July capitulation, the very, very low that we've had of this year, you could see coins are actually moving at a profit. And that means, there's people who've bought earlier, and basically sellers are exhausted. And so what's happening here? So people are still selling at a profit, and then here we wick into a loss. And then if we zoom in here for a second and we take the EMA off to get the most recent data, you could see, okay, we went into a loss on December 4th, like the actual day of the wick down, meant about 4% of people sold at a loss. We went up again, luckily, on that bounce. It happened again, but it seems this is making higher lows. And really what we want to be looking out for, when seeing where there could be reversal in the market, is you kind of want to see these sellers exhaust, because at some point there's going to be no more weak hands to sell. And that's why this is a great indicator.
Yeah, I think that's what the idea often is, like buy the blood, the classic investor approach, where everybody is super bearish and super down in the market, and that's what you want to buy. I think these indicators can definitely help with that. They often don't predict direct reversals, so keep that in mind. But they can definitely give you some information about who's on the wrong side, and combining them with these indicators like we've shown you, the CVD or leverage that's all being shaken out, maybe with some stable coin printing, that will give you a full picture in the market, and can make it better, can make your analysis better for positioning yourself longer term. Or if some stuff doesn't add up yet, you can be careful and wait a little bit until you have that confirmation from some of these indicators. And I think that's also why we want to show this to you. Like, there's always some bearish and bull case, and you have to carefully consider both, and see which one has the upper hand, and that's where you can make your bet. And data like this helps, defining those moments on when to bet.
Well, one comment I'll add, which I think is a good heuristic, a way to think about things, is the following. Like, the market can be viewed like a weighing machine where buyers and sellers come together to determine price. And it very often seems very random. And I personally love this data because it gives me more ways to understand what is happening. And I personally see more and more rhyme and reason to price action by understanding all this. And now on-chain specifically, it mostly deals with spot. It mostly deals with coins that are actually on chain instead of at exchanges. And it's typically harder to track any derivative or leverage data. But luckily, if you have a tool like Coinalyze, and you also have Glassnode, which probably for $10 a month you could get both and get a lot of data. you could kind of see what people are doing. And what's important, I think, is that the wickiness is often a consequence of the leverage in the spot activity on centralized exchanges. But I think very much more of the fundamentals you could see by looking at on-chain. Um, and if we look at the realized cap hodl wave, so what this basically does is these hodl waves, it displays in tranches what the ages of the last coin that has been moved. And so at the top, you'll have all the old coins. And for example, what you'll see here is I pulled this from May to now. What you'll see is throughout this period where price, from what is this, June 2019 to let's say August 2020, so almost a year, you could basically see that a lot of people are just holding their coins, and therefore these bands at the top are becoming bigger and bigger and bigger. And then what happens here at the end of 2020, during DeFi summer, you could see that many of these coins, these bands at the top, they're getting compressed. And that means because those bands, they are being moved. These coins are being moved because these whales, these people who've been sitting on their hands for a long time, they start to take profits. And the realized cap component here is a weighting that is added on top of the tranches of the age of the coins. And what it does is it weights the tranches by the last price that the coin was moved at. And what it really vividly shows you is that as price runs up, the old coins are moving hands. And then what's happening here is that slowly people start hodling again, and the bands, they go down. Even here during capitulation, they go down, 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 down. And then here at some point you see, okay, well, there's hardly any new coins being moved. Which is really interesting. And here on this first wick up, you see, okay, boom, people are starting to take profit after sitting out this entire July capitulation. But then if we look at what happened recently here, September, same trend plays out. People are taking profits, profits. And now, even though we had this cascading event, slowly people are just sitting on their hands. And well, what does that tell you? It means that people have an expectation of further appreciation, because otherwise they would be selling.
I think that's a good ending to look at your time frames, what you're trading. Like daily price action might not be relevant for your weekly or yearly holdings, but always consider that in your trading plan and your investment plan. So that's what these traders, I think, probably are doing. They just keep holding, and probably because they have a really good entry. And I think for some people, like if they aren't really experienced in the market, dollar cost averaging in can be a solution, especially when you can identify these better opportunities, and buy the blood in the best cases. But for now, we'll have to see what Bitcoin will be doing. If we see further de-risking across the board as a reaction to that fad, or when that stays out and actually people are too bearish, maybe shorting, we can squeeze them and maybe even continue the uptrend. But let's have some patience. Let's see what happens here. To finalize, I think I want to share my screen again, because Brucey was my guest. You can follow him on Twitter at CryptoBrucey. I put the link also in the description of the video, so you can click it and follow Brucey there. Brucey is a member from the Deus X DAO. You can follow them too for more of these articles or market commentaries. So please subscribe and follow. Make sure you also like and subscribe to Birb Nest video, and subscribe to the Birb Nest channel, so we can provide more of this content to you. Thank you, Bruce, for joining me in this explanation. I think this was a really well done analysis. I enjoyed making the article with you, so that's why I also want to make a webinar, and this one was also really good to do with you live in front of an audience, which was, I think, quite new for you. But you did really well. So thank you for joining.
Well, that's lovely to hear. Pleasure was mutual. I felt like I learned a lot, and appreciate everybody who watched, and the shout out. And I also actually would encourage, if people have anything that they want us to consider for maybe a next piece, hit us up, and then we can take a look at that.
Absolutely, absolutely. Yeah, just make sure you send a DM or send a tag us on Twitter if you want us to look at a topic or you found something interesting in the market. Okay, thank you for watching, and I hope to see you next time in a webinar or in the Burp Nest. Have a good day, and see you later.
Bye, everyone.